Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, January 5th, 2023. I am Frank Ochoa, aka PivotBoss. Good morning, everyone. Here's a look at the daily time frame of the ES right now. A very narrow range that continues to develop now on the 13th day of development here. We have an inside day that finished in the prior session. Currently, an inside day developing heading into the RTH Open. Very, very clear compression right now. So this is the previous year's close. We've just traded right around it. No real directional conviction around that level yet. We're kind of developing at the center of the 2-week range, which spans outward this way. So again, we could easily see a move down and still remain within the 2-week range. We could bounce. We could still be at the upper end of the 2-week range and still be range bound, but with a downward bias. A downward bias is still in play here, and the expectation would be that any strength up here could be rejected for a shot at downside expansion. A downside break through the 12-13 day range could lead to a 300 to 400 point move ahead, which could easily take us right down to the previous year's low of 3,500. So the first 3 weeks could be a directional move of about 300 to 400 points once we get a breakout from this narrow range. So taking a look here at the NQ, not quite a 13-day narrow range. This one's developing about an 8-day narrow range here. Still very similar in that it is inside day the last 2 days and sitting at the center of its wider 8-day pattern. Still a downward bias here and approaching the previous year's low as well. This one has enough energy to take you about 1,000 points here once we get a breakout move. So basically looking at 11,000 down to about 10,000 if the break were to be to the downside. If we're taking a look here at crude oil, let's bring crude oil up. Over here, crude oil has been in a death spiral here to begin the first 2 days of the year. Already this morning, we're seeing overnight strength here be met with selling pressure just shy of the previous session's low. This is a massive 2-day move downward, and at times a 2-day move that's that large can go a couple of ways. Sometimes it can be a big 2-day move like this down, and the next day it shows strength, but that usually happens if that 2-day low is on a new low. If it's not on a new low, then you tend to see a continuation until you find that low. So this could be a very big continuation downward here up ahead. This market continues to reject prices above 80, and currently we could be looking at further expansion to the next key range targets below. The next one here, 67.55, that's your 50% expansion target. And then you have value at 63.80, followed by 58.86 as the 100% extension from this edge. So those are the next 3 major targets down. We'll see how much more we go here in the near term, as we could be looking at a push beyond the previous year's low of 70.08. Taking a look at gold futures right now, gold giving it back here today. A big time rejection after the first 2 days up. We're strong here. Giving it back here now below the previous session's low. However, this is still a very bullish market. We're still seeing prices above the 8-period average. We could begin to see the bullish Pima trigger zone begin to take support here and see this thing push back up. This market also during this rally has been one that hasn't gone in a straight line. So you've seen it go up, then way back, then up, then way back, up and way back, up and back, up and back. So it has been a give and take market with an upward bias. This midpoint here, that's the midpoint of the previous month. That's the big one here to watch here this month. So we could pull back theoretically as deep as that and still see a bullish bounce. A failure there then begins to open up weakness back down the range. So again, that's going to be the level to watch here on a swing basis. Today though, looking for signs of a strong low that could lead to a bounce back above the 8-period average. Let's take a look here at lastly the YM. The YM right now is down 2/3%, but is still inside day to the previous session's range. The previous session also fell within the first trading day's range of the year there. You see again a market that has traded at the center of the wider 2-week pattern, 3-week pattern. So we could still see a drop and still be within this trading range. We could see a rally and still see a bounce back down. So right now we're still range bound until proven otherwise. We could continue to see back and forth price action, but one thing here that could trigger all of this to see expansion in the day to come is the NFP report ahead. So the NFP report prior to the RTH Open on Friday could get things going ahead, and again, that could begin a process of a 1, 2, or 3 week expansion once we get movement out of this range. This range right now, the way it currently quantifies, is about 2,500 points of potential movement here that could be ahead. So 25 points of energy inside this range developing, and if we break to the downside, that could lead us back toward about 3,100. So right now 33.5, this minus 2,500 rather, that takes you to about 31. That's about the breakout point here. Also the FOMC from the September 21st meeting. So that could be about where we go back to, especially after this hard higher high rejection. So watching and quantifying as this market remains within this range. All right, that's it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.